All right, y'all, I'm back, man. My bad. Let me get back on Instagram. Yeah, had to take a phone call, speak to my lovely wife, and so, yep, that happened. Make sure we're good with audio on YouTube. Y'all make sure y'all tap in. FNL, y'all know what it is. Y'all know what this is, man. Where are we? Come on, y'all. Come on, YouTube. Show me my live. Should show them live. Hold on, y'all. Be patient with your boy. Please be patient with your boy. I'm just trying to get all this figured out. Please be patient with your boy. Well, we good. All right, man. Again, I appreciate y'all showing love, showing support. Again, the show is sponsored by Ticker Apparel. Oh, let's get the banners going. I forgot to get the banners going. What's going on? My bad. So the show is sponsored by Ticker Apparel. Y'all see the background. You see the lower third. You see the hoodie. I need to be able to scoot back more, but my green screen will start showing other parts of the room if I get too far back from the camera. Because I'm using the webcam, but y'all know the hoodie, top quality stitching. Let me move them. I should probably be talking into the mic so y'all can hear me. But yeah, top quality stitching in the hoodie. Amazing work by my wife. We doing this fully vertically integrated. We got the hoodies, but I gotta order some hoodies. People been asking about the hoodies. I gotta order some. But yeah, man, lot of great stuff coming with Ticker. Y'all make sure y'all visit the website tickerapparel.com. Spring will be here soon. As crazy as that sounds, we're in December. March will be here before you know it. And so the premium tees are there. Make sure you go ahead and grab one, man. Get you one for and they make great stocking stuffers. It's the holidays, even before we get to spring now. If you're a last minute gift buyer and Christmas shopper like I can be, then yeah, I would highly encourage you to go to tickapparel.com. And the cool benefit about it is with every purchase you make, 10% of the gross sale will come back to you in the form of Satoshis, which are fractal Bitcoins. And you'll receive those via Coinbase or Cash App. So make sure at checkout you enter in the correct phone number or email address. It must be the correct phone number or email address. And you must have an active Coinbase or Cash App account in order to receive your Satoshis. So I know the title brought y'all in. Been a lot of stuff going on with crypto. And yeah, and the stock market. And so we're gonna talk about all of it. Also, man, make sure you pour up your favorite drink. And as always, it's a double cup Friday. I'm sipping on. I forgot. So we went to we do the Walmart grocery pickup, ordered some groceries, and got home, and like they gave us some drinks that weren't a part of our order. So when you can't really take it back because they're not gonna give it back to anybody. So um, it's some sort of black cherry soda mixed with some Ciroc watermelon. So it's all right. I'm a whiskey drinker, but I didn't have a chance to really get out and pick up my beverage of choice. And so this is what we on tonight. So we're gonna jump right into this, man. I'm not gonna put a ton of fluff on it right now. Again, I hope y'all had a great week, man. Appreciate y'all locking in and hope you have a great start to the weekend. What the heck's going on with crypto? What the heck's going on with the stock market? Is this the beginning of the end? Well, before I tell you what I think is happening and my opinion on it, just want to get a disclaimer out there. This information, everything that you hear on this show is for entertainment and educational purposes only. This is not sinuses. This is not financial advice. So anything you take and implement, please do your own due diligence and understand you are assuming 100% risk in doing so. So with that being said, what's really good with the crypto market? So we're gonna get into a screen share, show y'all a chart of Bitcoin, show y'all the chart of ETH, and just kind of give y'all kind of some higher level technical analysis that I look at with the stock market and with crypto. Now, as I get into the screen share, one thing I do want to mention is, and I talked about this in the previous video, guys. So there's two ways to look at this. You got the technical aspect to kind of see where a sentiment is and if things are breaking down. And then you got the fundamentals, like what's actually happening fundamentally within the economy. So the first thing I'm just going to talk about is the fundamentals. Right away, it's being said and rumored on Wall Street, CNBC.com. You guys can look up the articles, but that the Fed is going to aggressively roll back their tapering and their easy money policy, as well as ratchet up interest rates a lot faster. So initially, during 2020, when COVID first hit, Fed released this statement. They basically say, man, y'all not going to see no interest rate hikes until 2023. You know, they pump a ton of money into the economy. And essentially what happens is, because of the infrastructure, the internet and e-commerce, people were still buying stuff. While people did lose their jobs, the government wrote a huge check to help flow people via the PPP loans, via stimulus, you know, just a bunch of programs out there. There's a bunch of money floating around. People spending more money than they ever had. And in the probably the first time ever in a global pandemic, people made more money than they ever made in their lives. Starting business, like just across the board. The thing about that is it's leading to rapid inflation. So the most recent reading of inflation, which actually happened today, this Friday, December the 10th, said that inflation is the highest it's been since like 1982. I was born in 1983, so, and I'm 38. So you know, you do the math on that. So that's scaring some people. And so the Fed is looking at it like, hey, we got to get back in front of this. So in order for them to stave off and keep off inflation, what ultimately has to happen is they do have to roll back the tapering. They also have to roll back the interest rate cuts. So we got to get interest rates up quick. And so what does that mean? So you should see, if you're in an area like I am in Middle Tennessee, where housing prices are going absolutely crazy, that should, you know, quell some of that. But it's market specific with real estate. Middle Tennessee's market is crazy right now. A lot of people moving in, a lot of tech companies moving in, a lot of people from California and New York moving in. Prices are just high as hell. It's just what it is. But I say that to say, when interest rates go up, they also go up in safe investments. So like money market CDs, things that hold less risk, that have guaranteed interest rates, will now yield a better return when the federal government or the Federal Reserve Bank of the United States raises the interest rates. And in theory, what happens is more risky assets, that being crypto and stocks, will be sold off. Because if you have a ton of money, you have to think of it this way. There's two kind of people that's really controlling the market. You got the whales, who are pretty much in control, and whales are big money players, institutional money. And then you got baby boomers who control still most of the wealth in the United States. A lot of them are retiring, and so you can't expect them to keep their money in very risky assets. So if they can get a more safe and solid return somewhere else, they're going to likely sell their money there, because they're going to need their money real soon because they're retiring. All that means is just people going to start selling stocks and crypto. Now, the question is, what's the time frame? And listen, nobody has a crystal ball. If somebody could tell you exactly, I watched several YouTube channels and people have thrown out predictions. I don't know any of them have been right. But if I had to throw out a prediction, and we'll see, what happens. I'm gonna say maybe mid-year 2022 in the third quarter 2022. Stock market, crypto markets will hit a high, and I don't know that they'll crash. Well, the crypto market is going to crash. Historically, the crypto market has always crashed, but some people are concerned of what's called stagflation. So it doesn't necessarily have to be some black swan event or something happens that tanks the market. But what could happen is you have the situation where you have like constant inflation, but like low growth. And that's just not a good recipe for the overall economy. Again, things may not crash, but when you've had a run up like we've had, it typically means you come down just as hard. When that happens, I told you guys you could go watch Peter Schiff, you can go watch Harry Dent on YouTube. They're huge bears, and but they give some good information. I think Harry Dent has like a Harvard degree, PhD. He's pretty well versed, but you know, you could say it's gonna be a crash, and at some point you'll be right. The timing of all this stuff is difficult. You can kind of, try to forecast it, but it's just hard to say. But let's go ahead and get into the screen share. Wanted to show y'all. So we got it up. Make that a little bit bigger. Cool. So what you're looking at here is a chart of Bitcoin. Which one y'all like? I kind of like myself right here. I probably should remove my logo. I don't know if it'll let me do it. Let me see. I don't know. Okay. Anyway, let's go ahead and get into this Bitcoin chart so you guys can see what's going on. So yeah, I know you're looking at it, you see all these lines, you're trying to figure out what's going on. Right now, let's talk about the price of Bitcoin and what's taking place in the market. So Bitcoin right now has been hovering between, let's say, 48,000 and 52,000 for the last few days. You guys look at this chart. I keep technical analysis really simple. What I've noticed, you guys, I won't see a lot of candles. I don't get into that. I get into what works for me and where I can clearly see trends and what's happening. So Bitcoin right now, $48,397.95. As you look at this chart, what we see happening, and this is a 5-year chart. The lines that you see, the purple line is the 50-day moving average. Red line is the 100-day moving average. The green line is the 200-day moving average. Again, this is a 5-year chart. What you guys will notice, is when Bitcoin went parabolic back toward the end, October of 2020 through basically April. Yeah. So from October to April, Bitcoin went crazy. That's October of 2020 to April of 2021. Bitcoin went from about 9,000, basically about 60,000. Then it crashed pretty hard, dropped down to 31,000, spiked back up to like 69,000, and now we've had another dip or sell-off to 48,000. If you're looking at it, you can see clearly that purple line, which is the 50-day moving average, has been solid, and I mean solid support. Since it broke out, it has not crashed through that purple line. That's significant, and here's why. According to this chart, and I don't know if you guys can really see it, but over here on the right, there's a number in green, which is the actual price of Bitcoin. There's a number underneath it. I don't know if it'll let me bring it up. Nah. There's a number underneath it, which is $47,422 and some change. What is that number? That number is the exact line, meaning Bitcoin should stay within about 1 to 3% of that number. What's weird about Bitcoin versus the stock market, what you normally look at in the stock market is, because the stock market has an open and a close. So if it closes below this line, then generally speaking, that's a bad thing. But because crypto is 24 hours, excuse me, guys. Like I said, I had a little sinus infection. But if the with crypto being 24 hours, there's never really a close. But what I can tell you is that, let's try to get this chart a little bit better. Okay. So here's what I can tell you. If Bitcoin drops below 47,000, and it dropped to 42,000, quickly bounced back up. If it drops below 47,000 and we continue to see selling pressure below 47,000, the next stop is 29,000. $29,277.13 to be exact. That is the 100-day moving average on this chart. So what should happen is if Bitcoin crashes, it should come here and hopefully bounce. But obviously, if it drops from its current level to 29,000, that's almost another, 40%, 45% drop. And if that happens with Bitcoin, you can almost guarantee, and there's no such thing as guaranteed. Well, that's why I said almost. But I feel certain you're going to see that happen with other cryptos. And they're probably going to fall even harder than Bitcoin. So let's take a look at ETH. Hold on. Again, sorry about this, y'all. Working through this cold. Appreciate y'all patience. Sinus infection, my bad. Take a sip of my drink. I gotta get my soundboard pulled back up, man. Me missing the soundboard. But this is great information, man. Y'all make sure y'all like the content, subscribe, hit that notification bell, share it with a friend, so they can get these gems. And all this is on Yahoo Finance. I do this inside of my eBay account as well. This has worked well for me. This helps take the emotion out of it. I look at the fundamentals of what's going on, and then, I also taking into account here. So just looking from a trading perspective with Bitcoin, every time, at least since the initial breakout, which is a bullish sign, when we hit that purple line, which is a 50-day moving average, we bounce right back off of it to the upside. That's a good thing. If we go down to 29,000, obviously that's a bad thing. And then you got the 200,000. I mean, the 200-day moving average, which is like 18,000, which is kind of scary when you think about it. But if you believe what happens with most crypto during a bear market, there's a real possibility that it goes much lower than that when we're officially in a bear market. Even as I'm talking to you guys, you see the price of Bitcoin has gone up. It was down, now it's up. But in any event, we're going to go through this chart with a couple of cryptos as well as a couple of equities or stocks, and just talk about how things are moving, what's going on with what. So this is Bitcoin. You guys see right now, even though it's had a nice drop from that 69,000 to 48,000, it's still in a bullish trend because it hasn't fallen through the 50-day moving average. All right, let's move over to ETH. All right, so here's ETH. ETH is in a weird position. ETH is very solid. I think it's in a strong bull pattern. What you've noticed with ETH is that after its initial breakout, it never even touched the purple line. which is a 50-day moving average. So for ETH, support is at $2,719, $2,700, which will be a significant drop from where it is right now. You have to remember, back in the summer, I think it dropped to like 1,700 or something. But again, when we look at this line, you wanna pay attention to the line. What's going on with my mic? Nope. We have some mic technical difficulties. Hold on, guys. Things start leaning on me. Let me see what we got going on here. Gotta tighten it up. I'm glad I caught that. Cool. All right. So with ETH, you got $2,700 support. I feel confident this is just a little minor sell-off. I don't want to see it go to 2,700. I'm sure if you're holding ETH, you don't want to see it go to 2,700. But that's our support. But what you'll see is it never really touched that line. We get some sell-off and dips, but it continues to rip higher. So that's bullish for ETH, even though ETH is down 2% right now. Again, just to kind of touch on it, the 50-day moving average is $1,500. And then the 200-day moving average is $900. So that's basically the worst case scenario in the short term, which would be super painful. Super painful, let me tell you. So that's ETH. What else we got going on? We're talking about ETH. Let's look at Binance Coin. I've never looked at Binance Coin on this chart. Damn, look at that chart. And Binance Coin went crazy this year. My goodness. Phew. Okay. Binance Coin, as you guys can see, is also in a bullish trend. It's down slightly right now. $565.90 is the current price. You guys can see it right over here to the left. And just like ETH, it never touched the purple line during any sell-off. So I don't know what they're predicting on Twitter or YouTube. But right now, Binance Coin is in a super solid position. So it looks like it's going to continue to pump and go up. We may get a little bit of a retracement, but there's no reason to believe that it's going to drop to $370, which is the 50-day moving average, or any lower than that. So you got the 100-day at 195 and then the 200-day at 105. Man, you don't want to see either one of those happen. Okay. Is this Solana? Let's see what this is. Yeah, Solana. So I know Solana had a lot of fanfare. You're not going to get as good of information with the charts with Solana. The reason being is because this is a 5-year chart. And Solana just became a project earlier this year. I still like to use the 5-year chart. I just found it to be the most reliable and consistent. I'm sure I could dial it back to 1 year. I might get more lines and stuff. So I did. I dialed it back to 1 year. If you're looking at the 1-year chart. And again, from my experience, just my experience, again, my opinion, sometimes these can be accurate. But in this case for Solana, since it's only been going a year, let's just roll with the 1 year and see what we're looking at. It had a crazy breakout in early summer, went absolutely crazy, and now we're getting a sell-off. So if you look at Solana, if you're interested in Solana, so Solana is a huge platform for NFTs, and NFTs were huge this bull market and continue to be huge. So what's the deal? The deal is, if you look at it, it's a really bearish signal for Solana. So Solana hit the 200-day, the 50-day, which was 212, fell through it. Fell completely through it. Let's get this chart back right. It hit the 100-day, fell through it. 100-day was 185. It's currently at 169.85. The next stop, the 200-day, is 100. And you see it keeps adjusting based on how the chart is like elongated. So I don't really like that. I'm trying to keep my mouse so you guys can see it in its true form. So I'm going to stop moving my mouse so much, but you guys can see it. It has crashed through the 200-day at 185 over here to your right, which is right there, right here in this area. And it's currently 170.50, with the next place of support being $114.27. That's scary. That's scary. Now, if you're holding it, it's scary. If you're interested in getting in, 114.27. If you get this number, crypto is weird, man. This is, I've just really gotten into it, so I'm starting my crypto journey based on what I've heard. It's like catching a falling knife, even more so than when trying to catch stocks on the rebound. So a lot of this, let me just say, a lot of this, if you look at it, you can try to take a whack at 104. It may not even drop to 114. It may not go there. But it's important to note, it most certainly could. And I would say that, let me see. From my perspective, yeah, I would say that that's a good opportunity to grab some. If you see 114, I'm not saying bet the farm. I'm not suggesting you do anything. I should say, what I should say is that's when I may look at grabbing some. Because if we have another rip roaring rally, which a lot of people believe we will have, then this is going to be the time that you could possibly 10x some money or better if it sells off hard. Crypto is still really young and it's still really unpredictable regardless. And you have to think, the people who are quote unquote experts in crypto right now, these same people have only been doing it for like a year and a half. It's not like they got this huge runway of, I've been in crypto for the last 20, 25 years. The industry and Bitcoin itself was birthed in like 2008, 2009. And I can tell you that the majority of people on YouTube right now were not actively involved, engaged every day or regularly over the last 10 years. They just weren't. So I say that to say, even though people can show results and have done really well, kudos to them. You got to kind of take it with a grain of salt. Look at the numbers, see what they show you. So this is what's going on with Solana. Solana, you might be able to pick it up at 114. But I can tell you again, if you end up being able to pick it up at 114, man, if it doesn't crash through the floor at that point, it's going to be a heck of a steal. Heck of a steal. All right, let's look at some equities. What we got going on with stock market? We're going to look at PayPal. I've been circling around PayPal for a minute. I really, really, really like PayPal. It's dropped off nicely. Let's go to the 5-year chart. What we got going on PayPal? As you guys can see with PayPal, I think PayPal had like a 52-week high of like 300 or something, 308. Maybe a little bit higher than that. It has crashed down to a current price of 188. Oh, sorry, guys. Excuse me for a moment. Let me get some tissue for my nose. Cool. Oh, man. I know y'all like Man, you need to log off and go lay down. All this hacking and stuff you doing during the video, dog. What the hell's going on? I'm gonna try to wrap this up relatively quickly. We're gonna go through a couple of equities, see what the charts are telling us. I like PayPal fundamentally because they're getting into the crypto space. Go to the PayPal app, just like Robinhood, just like Square. Just like Cash App. You can buy some cryptos on PayPal now, directly through PayPal. That's big. So I like that shift. However, for the first time in like Cyber Monday history, sales were down slightly, but still they were down. So ideally, that doesn't bode well for PayPal. But I think in the long term, if you look at PayPal and Square are going to end up being the pillars of the new financial institution. I think they're going to be a lot more heavily involved going forward in crypto, and you'll see millennials adopt their technology before they kind of get out into other, riskier type of platforms. But anyway, as we look at the chart, the 50-day, 257, fell through it. 100-day, 210, fell through it. The next stop of support for PayPal, according to the charts, is $152.57. Why is that significant? Well, that's about another 10, 15% drop from where it is right now. That's pretty significant. Yeah, about 15, 17%. If my math serves me correctly. I should probably mute myself when I'm done. Cool. Had to hit that mute button so y'all don't hear all that. Okay, let's check this chart out. So we got 152. So here's another opportunity. Again, I think the easy money in the stock market and the crypto market are done. If you're looking for easy money, it's going to be more challenging now. The easy money came straight out of the bear market last part of last year, pretty much all this year. Now, if you're putting fresh money in the crypto and the stock market, you're going to have to know what you're doing, because you can get yourself burnt. Especially, money is relative. A large sum of money is relative to each person. So I'm not going to say what's a large amount, because that could be 500 to somebody. It could be 5,000 to another person. But whatever you're looking at investing, you got to be careful right now. Patience is the name of the game. So to be honest with you, the way I look at this, so specifically as we look at PayPal, I'm looking for PayPal to hit 152. If it hit 152, I'm going to take a chance. If it bounces back above 210, which is the next resistance, you have to be careful, because right now it looks like it's bouncing back a little bit, but you got to understand the way this works is when the stock falls through one of the support levels, support then becomes resistance. I'm going to say it again. When a stock falls through a support level, the support becomes resistance, typically. So in this instance, as we look at the charts, it's falling through the 100-day and the 50-day. So in order for me to get bullish to the next level, it had to break back up to 210. If it gets above 210 and kind of continues to go up, then the next place is 257. So that gives me about a 20% return between 210, close to 20% between 210 and 257. So I can get in. If it breaks out and it gets to 215, 220, I can come in, buy, feeling confident, thinking like, okay, it's gonna rip up to the next point of resistance, which is the 50-day, which is 2 57. So hopefully that makes sense. If it makes sense, cool. If it doesn't, drop me a note or a comment. I can see if I can go over it or phrase it in a different way. But right now, 210 is resistance, 152 is support. If it gets to support, that's going to be a great buying opportunity. You got to consider coming in with a heavy hand, or at least I'm considering coming in with a heavy hand. You should consider doing your own due diligence and research. So I can't tell you what to do there. Let's look at who we have. Apple's been strong, so I know they're strong. But look at Microsoft. We're looking at some of these blue chips. Microsoft has been such a well-ran company and such a good company since this other guy took over as CEO and they bought LinkedIn and they did all these moves, man. They just been killing it. Like at no time, even when COVID hit, at no time did it drop below the 50-day moving average over a 5-year period. I think it's a 5-year chart. Yeah, 5-year chart. Over the last 5 years, Microsoft stock has not dropped below the 50-day moving average. It has been, oh man, what is going on with my mic? Hold on, y'all. I'm trying to get my mic together. It ain't doing right. I don't know. I keep losing it. All right, come on, Mike. Do the right thing. Oh, that mercy. I don't know why I ain't getting no love from my mic, man. What's going on with my mic? Hold on, y'all. Work with your boy. All right. I just got to hold on. I noticed that thing started drooping on me again. Trying to make sure I'm cool. Let's see if I leave it like this, if we can get it to work. Stretch it out a little bit. All right, cool. We're good, man. Y'all soldiers hanging in there with your kid. I've been having all type of technical difficulties today. Okay, yeah, I did unmute myself, didn't I? All right, cool. So yeah, as I was saying, Microsoft, you guys see it. Never drop below the 50-day. It's been super strong. I mean, I don't necessarily like buying at all-time highs, but that thing just keep going up. Regardless of what the market tries to hit it with, it's been that type of safe haven. You'll probably see the same. It's not much to talk about with Microsoft. It hadn't dipped below the 50-day, 100-day. I mean, it's just been a solid performer. So you're good there. What's Apple done? We'll take a look at Apple too. They had Apple down here. Here it is. The Apple? That's not right. Something is off on my Apple chart, and I don't know what it is. You got a huge dip right here. And this may be taking into account the stock split. They did have a stock split at some point. But Apple is at all-time highs, so I'm not sure why it's showing like this. I don't think it's taking into account the stock split. Bad chart. Let's see what we got. Let's go to Tesla. I know they've been on a tear. I know they had a split too, so maybe it shows kind of wonky, but it looks better now. So 5-year on Tesla, as you guys can see, we had the COVID dip. After the COVID dip, man, we shot up out of there. If you'd have bought that COVID dip, whoo, man, you'd have been sitting super nice right now if you'd have bought that COVID dip. That'd have been one of the best financial decisions you'd ever made in your life. You'd have bought that dip. That thing is super solid, man. I have no idea what's going on with this mic. I'm gonna just have to hold on to it. All right, so same thing with Tesla. So it spiked up, and then this is called a consolidation period. It dipped, kind of bounced around, never This is a key sign that it's a good time to accumulate and buy the stock. It dipped down, held at the purple line, which is the 50-day, never fell through it. And it gradually started going back up. And then boom, moonshot. So the charts tell you a lot. And that's why people use charts. I like the 5-year. This is more for swing trading and maybe not day trading. You have to be a little bit more patient with this. You can see right now, the dip happened basically back at the beginning of this year. And it basically went down from, let's call it March through May. And then it consolidated for another 3 or 4 months. So it didn't really take back off until the end of September. So you just had to be patient, but at the same time, you went from 600 to like 1,200. So you could have doubled your money in a matter of 6-7 months. I don't know where else you're getting that type of return on your money. And that's just straight up buying the equity. If you were bold enough to get in some of the options, then you'd have made substantial, call options, that is, you'd made substantially more money. But at this point, Tesla is solid. It's a very volatile stock, as you guys can see. So right now, the support, the 50-day is $765. So Tesla can potentially fall before it hits any support and then either consolidates and goes back up or falls through that support level. It could go down as low as $765, which is about a 30% decline from its current levels. So that's scary if you bought up there at the top. That's why I don't like buying at the top. And I try to look at the charts to see what's going on. Let's look at a not so glamorous stock. What's going on with Costco? They've been solid. It's a good looking chart. Oh, you had a perfect time to get in at the beginning of 2021. Back in March. Woo! That thing perfect. And you guys see it. You guys can see what I'm talking about. And this is why I like the 5-year. It's so solid and so predictable, going all the way back to 2019. If you look at this every time, now you may have got the buy-in entry wrong, but it fell through back in 2018, fell through the 50-day, hit the 200-day, which was the red line, bounced right off of it, right back in the bull market mode. Here you go. Back in early 2020, COVID, it kind of dribbled along, consolidated on the purple line, the 50-day, back up. Tank. Now, it was perfect. Thing went back down to the 100-day. Right back off. Boom. Moonshot. Big boy moonshot. And now it's just, it's in parabolic mode. You got to be, I'm always leery of kind of buying in super parabolic mode. You typically get your face handed to you when you do that. Meaning, you that's how you suffer those 20-30% dips in a week when you buy at the absolute top. So I try to avoid that. But yeah, I think this was a great video outside of all the hacking and coughing and everything, mic issues. From a content perspective, y'all, what y'all think? 5-year chart. And you can add these just to show you on Yahoo Finance how to add them. You go to indicators, you go to moving average, and then you just change this number. You change the 50-day, 100-day, 200-day. That's all I did. I selected the color I wanted, and then I click save, and then it puts a line on the chart for you. Like I said, the 5-year has been the most consistent, where you're able to remove emotion and say it's a good time to buy based on historical data. Now, what would have likely happened, say you were looking at Costco here when it hit the purple line. You bought it and it went up. When it hit the purple line here, you may have would have felt good. When it dropped through the purple line, depending on what you're trying to accomplish, if it was a short-term trade, you may have got a little bit nervous and sold out of it. Or you may have dollar cost averaged in it and bought it down to the 100-day. The 100-day was perfect support, bounced back up. Now, obviously, it could have gone from, $380 all the way down to 305, which would have been the 200-day moving average. But in this instance, the 100-day was perfect support. So, got anything else? I don't have anybody in the chat to throw anything out. Let's look at the overall market. Let's look at tech. QQQs. Bull mode still, even with the sell-off. We had some bounce back days, but I just wanted y'all to see what's going on. It's still in a very bullish trend. Since the COVID, and this would have scared you a little, it almost touched the 200-day back on the COVID dip, but that thing shot right back up. This is what you call a V-shaped recovery, and it's not even touched the purple line. So now the scary part about this is that at some point you get a correction, and if you fall through the 50-day here to like the 100-day, that's gonna sting. That's gonna sting. So you have $400 on the QQQs, and you drop to 300. That's a 25% drop. I think as the Federal Reserve begins to raise interest rates, because you got to think there's a couple things coming next year: interest rates, possibly higher taxes, no stimulus. The stimuluses are done. No PPP. All this stuff gone. And then it's an election year. The midterm elections of 2022 are next year. Typically, election year are just a rough year for investing. So, yeah, it's gonna be interesting for sure. But the QQQs, I don't know that we get I don't know that where it's gonna drop. Right? I'm just trying to throw out some scenarios, but I'm telling you, you gotta be careful. If you just started investing in the last couple of years, I hope you've done really well. It's kind of been hard not to do okay. But I can tell you just from my experience, since 2007, markets don't typically go up like this. It's been a huge blessing for a lot of people. But this thing can go sour quickly. And so, just be alert. Don't get lazy with your investing, especially if you're trading. You cannot afford to get lazy if you're trading. But yeah, man, what an exciting episode! What great content! Again, man, go ahead and smash that like button, share, smash that notification bell, and the subscribe button. Share with friends and family. Y'all let me know if y'all like these charts. You like the consistency of the charts. Simple explanation. Again, we're not talking about wicks and how big the wick is and tall, and all that stuff is cool. And I'm actually about to order some books about technical analysis, just because I don't think you can never be too sophisticated of an investor. Having more knowledge about what you're doing is always a good thing. But for me, from a process, take action, let's move, I need simple but informative, simple but consistent. And the 5-year chart of the 50-day, the 100-day, and 200-day move that for me. When you start getting into the wicks and things, I just feel like there's more data points to analyze, and you can find yourself in analysis paralysis. However, I'm sure some of those things have helped people avoid some huge losses. So, as well as have some huge wins. So, cool, man. I'm gonna go ahead and wrap it up tonight. Like I said, I know I was a little bit kind of under the weather with everything going on. I appreciate y'all rocking with me, being patient through this whole process, and it's been a blessing. I hope y'all getting some great value. I'm looking forward to doing more content, so y'all start watching for that. Trying to get this thing full time. One of the goals of the page, we're looking to expand the ticker brand. We really got to get that out there. And we're looking to get more valuable content on the page, man. So I appreciate y'all love and support, all the likes, all the shares, everything that y'all have done for me to this point is greatly appreciated. Trust me. Until next weekend, or maybe before, stay locked in. I appreciate y'all. Love and blessings. Good night.